As the Canadian economy continues to adjust to U.S. trade restrictions, we expect the economy to grow modestly and inflation to stay close to our 2% target. However, uncertainty around our forecast is heightened. The range of possible outcomes is wider than usual. U.S. trade policy remains unpredictable, and geopolitical risks are elevated.
Bank of Canada Governor Tiff Macklem there sharing the central bank's economic outlook against the backdrop of a ton of uncertainty punctuated by CUSMA's review this year. The bank held its key interest rate at 2.25% for a second consecutive meeting, though Macklem warns the bank's efforts to forecast the Canadian economy have grown increasingly difficult given the tariffs imposed by U.S. President Donald Trump. Jason Jacques is the Parliamentary Budget Officer. Hi, Mr. Jacques. Pleasure to welcome you back to studio. Thank you very much for making the time.
Oh, my pleasure. Thanks for your interest in our work.
For sure. So we just heard from Mr. Macklem, who, of course, was talking about the state of the economy, the risks moving forward. And I thought that was a good jumping off point for some analysis that you've recently done about some of the central promises the federal government is making in order to counter some of the potential investment flight due to that uncertainty. And they have announced through the federal budget, you know, a sizable chunk of spending that they say will spur that investment over time, in particular over the next decade. What is your initial analysis of what that money will or won't do?
So, as you mentioned, Budget 2025 had the headline promise of $1 trillion of capital investment happening over the next 5 years. We took a deep dive into it, and we found that the vast majority of that money was actually already announced prior to Budget 2025, so about 85% of it. So while there is new money in Budget 2025 that will stimulate or support, potentially support additional investment, a lot of that $1 trillion was going to happen anyway, even before Budget 2025. And that ends up being important because, again, as the government's indicated, a central part of their economic policy is to substantially increase investment in the Canadian economy, helping firms and workers kind of turn away from the United States and that export market and reorient themselves to other export markets and potentially more productive activities. So while $1 trillion is nothing to sneeze at, and even $150 billion, 15% of that, still a substantial chunk of change, a lot of that was going to happen anyway.
And so is it fair to say that a lot of that was actually in motion prior to the new government taking the helm?
Oh yeah, absolutely. It was already in motion, and again, even with the $1 trillion, a lot of that ends up being contingent upon other governments, so either provincial governments, municipal governments, but also firms. So companies actually have to come to the table as well and say, you know what, thank you, federal government, for the additional support that you're going to provide to us, either in tax credits or additional subsidies or programs. Yeah, we're going to bet on Canada. Like, we're comfortable building a new factory here, opening up a new mine. And again, these are the types of investments that you need to look out over the next 20 years to figure out whether it's actually going to be worthwhile. And as the governor mentioned today, there continues to be a lot of uncertainty in the economy, especially in the lead up to the CUSMA renegotiation.
In some of those measures that they announced, like, could you assess like how unique they are versus, I mean, there's been lots of times where governments try to compel the private sector to bet on Canada. Obviously, the circumstances surrounding this particular ask are different given what's going on with the United States. But I've covered a lot of budgets, and I'm sure you've analyzed a lot of budgets where, you know, capital cost allowances, things like that have been used in order to spur the private sector's investment. Is there something particularly unique about the suite of measures you've seen here?
Based upon what we've looked at thus far, grosso modo, the answer ends up being no. There are some programs or some initiatives that are a little bit different than what we've seen in the past. That said, it does end up kind of looking like just simply a different flavor of ice cream at this point. And from our perspective, we end up being fairly prudent as part of our forecasting. Similar, and I'd say similar to the Government of Canada and Budget 2025. Simply because someone says that it's new, it's innovative, what you're going to see is not what has happened in history. Without any evidence or without any proof, it does seem kind of foolhardy to rush out there and say, you know what, it's going to be a spectacular takeoff on the investment side. I certainly hope that's the case, that what happens is not what we've seen in the past, and I guess we'll just wait and see.
Yeah, wait and see is exactly it. Speaking of which, I did want to ask you about something we've touched on in previous conversations, which is the promise, much of which materialized through this budget, to cut on the side of government spending, and in particular see that through cuts to the public service. It's been really difficult, I would say, to try and ascertain exactly what the level of cuts end up being, and part of that is because of transparency or lack thereof. Other parts are just because it hasn't made its full way through the system and we don't know who's taken what. You, from the beginning, have been anxious to find out, A, what is the true nature of the cut, but B, like, what does that mean for Canadians and the services that they expect from the government? Where are you in finding answers on those two questions?
So I could say that based upon the information that we requested and that we received from most government departments and agencies, there are still three government departments that have declined to share the detailed information with us, the Canada Revenue Agency being one of them, which is a big one. But based upon the information that we've received, we're in a good position to have a sense of the plan that's in place from the government at a detailed level. So something the government hasn't released yet are which programs across the government of Canada are actually going to feel the brunt of spending reductions and layoffs. And that's something that we can now look at internally, and we're going to be sharing some of that information with a parliamentary committee in the coming weeks. We can now identify those, and we can now see those elements. On the service side, it's a little bit less clear. And I can say that for the vast majority of responses we've received, the departments have indicated that there should be low or limited service level impacts felt as a result of the cuts. So it remains to be an open question regarding how one cuts $44 billion over the next 5 years and lays off 16,000 public servants with low or limited impacts. But that's obviously something that Parliament will want to look into.
Have they provided any details to you about how they arrived at that conclusion? And on instinct, does it seem hard to square the circle?
Well, on our end, we only asked for their assessment of what the service level impacts would be. So we didn't ask them for their underlying plans around the service level impacts. And I would say, again, we requested the data not to get it into the guts of, okay, what's going to happen to food safety in Canada. We were more focused on, based upon the government's overall fiscal management, does this make sense? Because the government is planning on cutting $60 billion over the next 5 years in federal spending and spending it elsewhere. And so we need to figure out, is there a plan in place? Can this actually be executed? And if it can't be executed, what are the consequences for the government actually respecting its overall fiscal anchors or its fiscal management approach?
Can it be executed?
We will find out.
But based on the numbers that they provided to you?
Based upon the numbers, we have an add up for a good part of the plan at this point. Again, I mentioned the Canada Revenue Agency, Parks Canada, Library and Archives somehow all declined to provide information to us. But we have about 80% of a plan at this point, which again is, I would say it's reassuring. There's a plan in place. A separate question, and the one that you started with, you alluded to, is one of transparency. So while we have the information, yes. And there's certainly a large stack of papers in both official languages sitting in the President of the Treasury Board's office at this point in the government, none of it's been made public in a comprehensive way. So while information has been leaking out to the public, the government has yet to actually table some sort of official document indicating what the detailed plans are.
Okay, I'm going to leave it on that note. Mr. Jacques, thank you as always. Appreciate it.
My pleasure. Thanks.